Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we'll look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature, for this 19th day of January 2012. We're looking at about early afternoon on a Thursday. Actually, the first thing we're looking at here is a chart of the mini mid cap, the S&P 400 mini mid cap, and this is a derivation of our MRSEM portfolio or model, trading model, which is one of our preferred trading models. This is actually a slightly better version of it. It kind of just cherry picks the best trades and kind of waits for the best opportunities. And as you can see, we'll look at the MRCM in a second, but as you can see, we're in quite another impressive winner, about $1,300, I believe. Let's see, 913 up to 30, about $1,700 actually. So a pretty impressive gain. Just kind of hangs back and waits for those great opportunities. You see these big, but it also seeks to lock in gains as well. With a profit target, hence the MRSEM PT. And as you can see, it's a pretty impressive model. We'll go ahead and just take a quick look while we've got it on our screen at how it's done. $77,000, $9,900 maximum drawdown, $600 average trade net profit per contract. So it's an individual contract, so not a bad. If you take a look at the equity curve going back to 2002, it's been pretty impressive. Actually, you can factor in another $10,000. Let's say you started January 2003, actually. So you're going to add another $10,000 because it did have a pretty nasty drawdown, I guess, during the internet bubble bursting. But what we're looking at here is a little bit of a market analysis, and we're going to go ahead and switch over to the take a quick look at the intraday here on this day. We've been bullish. We've been unofficially bullish since I believe 11:30. We had to wait for official bullishness at 12:30. This, of course, is the ES market that we're speaking of. The S&P 500 futures contract, front month in nature, and 1309 is the last print. And we've been bullish for quite some time. As you can see, almost 200 points on the unofficial bullish side, and almost 100 points on the since moving to officially bullish, and those gains have been added to with the last couple of days breakout. We'll look at a daily chart of the market in a second, but as you can see, we're getting a little bit the market's getting a little bit tired after a pretty nice run up yesterday. As you can see, these are our proprietary indicators, our intraday dynamics. This is how we gauge the market. Obviously, green means bull. The lighter green means fully bullish, extremely bullish. And as you can see, the reason we're getting some follow through in the market today is we had extreme bullishness in several indicators going into the close yesterday. On Wednesday, this of course is a holiday shortened week with the Martin Luther King Jr. holiday. On Monday, the markets were closed, so we've been open a couple of days now. This is the third day of the week. Traditionally, it would be the fourth, but nevertheless, the market is pretty impressive. The divergences that you would sometimes expect after a pretty nice run-up that we had yesterday, and we're going to take a look at our Evo Active, which really caught the lion's share of this move. It was a beautiful trade, probably the best trade of the day yesterday for our portfolios was the Evo Active, and we'll take a look at that in a second. But again, gotta have to sneeze. Sorry. Okay, so again, not many particular. Sorry about that. Not many particular divergences, which is pretty healthy for the market overall. And actually, if you look at a chart of the daily market, which we'll do in a second, it's really just pretty much an all clear. We expected a quick move to 1300. Our actual first target is going to be about 1340 to 1360 on our official bullishness. We'll kind of gauge the market once we get there. We're already at 1310, again, comfortably above, relatively comfortably above the significantly round level of 1300, potentially psychologically significant, but having, I believe, no technical basis of significance. But in terms of a free informational day trade, one could argue the market is looking a little tired here. So honestly, we're probably, out of 5 stars, maybe a 3-star trade. We'll go ahead and buy. Obviously, traditionally, you're going to buy at the retest of the trend, just as you did right here, here, amidst a bullish market, and you're going to continue to book those profits. But having said that, just looking a little tired here. Nevertheless, we'll call it a 3. 3 out of 5 stars. Go ahead and buy it 1309. Target probably 1314, I believe. And have a pretty tight stop. We could get a kind of a swoon. It's probably going to chop for the rest of the day here today, but if you get this video and we're still holding pretty strong around 1309, 1310, go ahead and hold that for 14 to 15 with a stop of around 7. 1307 that is. But there's a quick look at the intraday analytics. Obviously fully bullish and not really seeing any particularly strong divergences on the negative side, suggesting the market could go higher. So we're going to go ahead and minimize that and look at what we just looked at, our MRSCM PT. We're actually going to look at where would that be? I believe it's right here. So there's the actual here's the actual MRSEM, which I believe is right here. There we go. So the actual MRSEM, as you can see, is participating nicely on the $1,700 gain, but really it was in a bad trade. Had a couple of beautiful trades, had a really bad string, and generally after 2 big losses, we actually doubled our exposure on this system, this particular system, because anytime you have a drawdown, that's just simply a clearance sale. That's a sell price. We all like to get good deals, and anytime you see a discount, essentially of let's say $6,000, actually that's closer to, we'll call that 30, maybe $3,500. Discount of about $7,000. $8,000, that's when you want to add to go ahead and buy, and that's when you want to take advantage of the opportunity. And of course, it was very fruitful in that we had 2 beautiful winners, and actually 3. But this system actually gave up not only the profits, but it actually turned into loss. Fortunately, as we always recommend, you definitely want to be diversified, and we'll take a look at what's diversifying this system in a second, particularly for our portfolios. To be diversified on the long side, you definitely want to be hedging with varying approaches to market analytics and trading and methodologies. But we're going to take a look at the we mentioned a second ago, I believe, $9,900 was the maximum drawdown. We'll go ahead and switch over to performance summary, and I believe $80,000. Here you're making $90,000 in just 5 years, and pretty comfortable. That's since '06. Pretty comfortable equity curve going up. In fact, this was the drawdown that we mentioned. Anytime you see these drawdowns, boom, buy, shoo, buy, shoo, buy, shoo. You like that? Those sound effects. Buy, shoo, very nice, and buy, shoo, very nice, and buy. Hopefully this will be a shoo, keep on going. But as you can see, not quite as nice as the PT version, but you can trade both. You can actually trade both, and that's what we do. $647 as the average net trade profit. Not too bad per contract. But we're actually going to look at the quick analytics of the daily S&Ps. It's just been marching right along. Just been a beautiful thing, as you can see right here. At 11:30, we actually went bullish on the reclamation of 1100, but the close was 11:30. Had to take the close again. Had to take the close of this bar. It was a reclamation of 1200 on an intraday basis, and had to take the close 12:30. Had that swoon, whoosh, but a beautiful inverted H&S formation has led to the break out to new highs. We now have clean air. At around 1280, we kind of rounded out, kind of did a little bit of a handle on a cup and handle right there, and then blasted through, and then kind of rounded out, and then now we've just continued higher. So it's a beautiful thing. Again, we do have this resistance here around 1340. So 1340 to 1360 is going to be our first target. We're going to seek again to see how the market trades. But from a directional movement perspective, from a momentum perspective, from a trend following perspective, from a price technical perspective, the market is fully bullish and clean air. So we continue to hold on to our bullish bias on the market in terms of the free contrarian sentiment indicator system right here. This trades the TF, and again, you can trade this for free. Just contact us to find out how you can do that. $4,000 average trade net profit, $127,000, $12,000 maximum drawdown, and you can see, again, going back since '03, it's been a pretty impressive equity curve. Kind of waiting. We've had one little loss here, so kind of waiting for some new equity highs. So it's a great opportunity, but we're really not seeing it. In fact, the market is kind of particularly bullish, because we're getting a break to new highs, to clean air, yet the equity call volume ratio is actually higher. So we're actually getting more fear in the market. More people are buying puts relative to calls than one would expect, particularly given a market that's breaking out. You definitely would see relatively extreme levels of complacency, but you're not. You're not seeing that many call buyers. So with that much fear built into the market, that means it can do what? Go higher. And that's, of course, the mini Russell. Again, free model. The VIX, of course, drifting lower, but that can stay low for quite some time. So we're going to go ahead and minimize this and look at so we're looking at our MRSEM PTL, and actually what we're looking at here is our platinum trading models. As you can see, here's the ESM, caught a beautiful winner just the other day. Beautiful long set, absolutely beautiful. Just bought essentially on the break a couple of days ago. This was I believe that was Tuesday. Actually, that was last Friday. We had the swoon Tuesday on the 17th. Exited, so bought on the break last Friday, and then held for the weekend, and then it exited right before the breakdown. So it was an absolutely beautiful trade. Obviously, in hindsight, again, see the market's breaking down a little bit there. That's why that was a 3-star trade. Even thought about a 2-star. The market is breaking down here a little bit. Nevertheless, the ESM 30 is flat. ESM 30X didn't really catch that trade. Caught a couple of there and a loss there. Let's see how we're doing here. Beautiful. And again, this was the August breakdown, an errant aberration, if you will, in terms of equity. So a beautiful opportunity to get involved with this model. Unfortunately, we were trading this and kind of took some of those losses, but fortunately were diversified, and that's really the key, is diversification. EVR3, again, the markets are just breaking down here, and we've got some net long exposure. As I look at the map black, we're long 10 contracts, so definitely would have rathered the market continued higher, but you know, it's going to do what it's going to do. And had today on the ISRD had a short signal, again being hedged, so we're now short. 1307.75 was the short signal. You can't really see that, but we're right at back to break even on the short signal, so we are somewhat hedged, although net long on the market. EVM-CM again hasn't really been trading. CBR in a long loser after a long winner yesterday. The R30A, catching those two, again, no trades. We really want to just pick the best opportunities. R30B, R30C, catching a nice winner there. Again, no trades. But here's what we mentioned the other day. This is a relatively new model. We develop about 2 to 4 new models, and our development process is such that we really stay away from any sort of curve fitting or optimization of data. I mean, that's really just not going to, if you try and overcomplicate things, optimize, you're just really not going to go anywhere. So we developed still about 2 to 4 models, and that's why this model was just developed probably within the last 6 months, and look at the winners that it continues to put up. This was actually our first live profit, was this beauty right here. Had a quick loss, couple of winners, loss, another nice winner, and again, here's probably the best winner since going live. So we were long at 913, and also we were long, again, we mentioned the MRSEM was short, but we were actually net zero because this was long, so we were actually hedged, and now actually again double the long exposure, particularly on the EM contract on the swing side. Given that we were long again, buying at around 13, I believe, 13, so another $1,700, another $1,500 in profit on both the MRSEM PT and the MRSEM and the MDS. So that's a quick look at our trading models, kind of lengthy. So we have our intraday analysis, fully bullish. I'm sorry, daily analysis, fully bullish, as we have been since about 100 to 200 points ago in the S&P. So our market timing, fully bullish. Intraday, fully bullish. Not really going to get any day trades for the rest of the day because we did have the beautiful trades yesterday. In fact, we were going to point out that that beautiful trade that we saw, which was right here. That's the Evo Active trading the EM contract, bought yesterday morning at 908.10 and sold on just off the highs at 922. So about $1,300, $1,400 really, for the and that's per contract. And so that's just one trading model. Evo Active trading the EM also trades the TF as well, and as you can see, it's just been beautiful trading these markets. 764.60 all the way up to 776.40, so about $1,200. Four incredibly impressive wins that we've had, and we actually mentioned this last week. So we're actually running out of time, so we're going to go ahead and switch over and back to, and hope we don't go to a blank screen. There we go. So there's a Delta DTS, and there's the Evo EM Active that we mentioned yesterday, buying at 908.10, selling at 2160. So a pretty impressive, almost $1,400 gain, again, per contract. Well, there you go, $1,350. So that was one contract. And this is the Delta DTS. Now, this has two versions. The regular version is a $15,000 portfolio, trades about 9 models intraday, so closes all the exposure by the day's end. So $4,500 in margin requirements. We recommend $15,000 to start the portfolio. That's the norm. So that gives you about $10,000 in drawdown risk potential, but there's also an aggressive version, being that it's just $4,500 in margin required since everything's closed by the end of the day. We have a 10K aggressive version. So if you look at these, here you go, right here, the 10K version up 33.18% just yesterday, up 22% for the $15,000 version. We have other $10,000 models, MSA UDT up 11%, TTDHR up 12.25%, $1,200 yesterday. MAPDT was up $3,750 yesterday, 19%. It's a $20,000 portfolio. There's a Delta DTS, which easily, this is a conservative version, easily up 33% on a 10K aggressive version. So that's how that's been. We're going to go ahead and look over now to see. So you have the Delta DTS over the last 245 days since tracking of January 2011. These portfolios in real-time tracking that we track every day, Delta DTS has made 414%. Now that's on a $15,000 model. So you're actually looking at a mind-blowing, a staggering 620% on the 10K version. So the Delta DTS can be we've been talking about just tracking this, or essentially it's just putting in a $10,000 version because it's the same trading. It's the same 9 trading models for diversification. Approach the market differently. 620% is the actual return for the aggressive version. So if you guys are interested in these portfolios, any of these models, you can trade that for 10. MSA UDT is up here, number 2 spot. MAPDT is actually closed. That's the original version, but you can go to the website and subscribe to the MAPDT version 5.0. Click here for all of our real-time tracking. There's a 5.0 for 28.88 per quarter. The systems that we looked at recently were the Platinum Reserve. Here you can take a look at those analytics. The Platinum Reserve. Just simply add to cart. We're going to look at the Delta DTS probably. And we'll just add to cart. $788 for 3 months. Generally, trading models are about $100 a month per system. Here you get 9 systems, which would be $900 a month, $2,700 every 3 months. It's $788 every 3 months. Pretty good deal. So you can go ahead and add that. What's already been added to your cart. Go ahead and change that to 4 and enter promo code video. It's $3,100 a year. It's basically what you would pay per quarter, and I guess that's coupon code has expired. We'll work on that. You'll probably be able to save 20%, and you're going to save almost 25% on your commissions too. So set up the account. The broker will set up the account. The fully automated trading models will run in your account, and you too can participate in these amazing profits. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and we are out of time. We'll see you next time.